Hi, everyone. I am Jenny Bennett, and I work at Summit Bank.
And I am Ashley Horner. I'm the SBA Program Administrator with Summit Bank.
Today, we are here to address the top 7 questions about the Paycheck Protection Program that we're getting from our clients. And who better to answer those questions than our SBA guru, Ashley Horner. So question number 1. Ashley, what happens when I offer employment back to an employee and he or she refuses to come back?
Yeah, so we were getting this question a lot because the part of the PPP loan, there's the biggest part of it is the forgiveness, and forgiveness can be eroded, if you will, based off of not having your full FTE count come back. So borrowers were concerned that if I make offers to employees and they're making more money on unemployment specifically, how and why would they want to come back and work at the firm that I have? The answer is document, document, document. It's going to end up not impacting the FTE reduction amount in your forgiveness calculation. So the best advice is make sure that you have a written offer back to your employee with either some kind of deadline that they need to respond by or that they need to respond, period. And if they end up saying no, keep the documentation. And then we will include that in the forgiveness package, and we won't count that FTE against you when it comes to the forgiveness component.
Okay, very good answer. Thank you for your clarification with that. Question number 2, what is the covered period and the alternative covered period? Can you please explain those two things and what they mean?
Yeah, so this was new to us on May 15th when we ended up getting the forgiveness calculation worksheet. They ended up coming out with this alternative covered period, and that's what Jenny's talking about. So we've always been operating under the covered period, and the covered period was to be 8 weeks. So this was pre-May 15th. 8 weeks from the time that you got your money, and that was going to be your covered period. And the covered period was when you could use your money. Well, then we got the forgiveness calculation on May 15th, and it came out with a further definition of the covered period, and then also threw in this new thing called the alternative covered period. And the covered period has now been boiled down to 56 days. So the thing we need to remember here is it's not a full 8 weeks if you were counting it on a calendar. So if you got your money on a Friday, your forgiveness period will end on a Thursday. So like a day before that 8 weeks. So just remember that when you're doing your forgiveness covered period, trying to figure out what that buffer is. The alternative covered period is if you have a payroll that is bi-weekly or more often, then you get to change what your covered period is. Still going to be 56 days, but now that start date gets moved to coincide with that first payroll date. So if you got your money, let's pretend like on April 1st, and you pay every other week, so it would be bi-weekly. Then you can choose, let's pretend like your bi-weekly payroll, it ended on, or you paid out on April 5th. So instead of your covered period starting on April 1st, you can move it to coincide with your first payroll run, which would be April 5th. So it allowed some great flexibility for borrowers. It was a great addition.
Okay, fantastic. Thank you. One of our number 3 top questions is, how do I deploy all of the PPP money that my company or nonprofit was given and comply at the same time with the maximum amount of forgiveness?
So we haven't had guidance on forgiveness until we got this little piece of information that we got on Friday, the 15th of May. What I would recommend is, even though you are not near the end of your covered period, whatever you call that, whether it's the alternative or the standard covered period, I would recommend that you get into that 11-page worksheet and you start to work through it. In fact, Summit is going to end up posting an Excel worksheet that's going to help borrowers further kind of play out some scenarios of, if I did bring back Jenny and I brought her back at halftime and not full-time, how is that going to impact my forgiveness amount? So I would say, if you have some free time, or try and find some free time and get into that worksheet, both the Excel one that Summit's creating as well as the SBA form, and start to work through different scenarios so you can maximize your forgiveness amount.
Excellent. You can never start too early.
Agreed.
Question number 4, Ashley, can you explain the average FTE calculation that is used in the forgiveness application?
Yeah, so when we first started this whole PPP dance, there was the bill came out with their what FTE was. They called it a full-time equivalent, which left us all very perplexed. Is full-time equivalent 40 hours, or if I work 20 hours and Jenny worked 20 hours, does that mean we're full-time equivalent? People and businesses have different methodology. So SBA came out with what FTE means, and you get 2 different options. One is everybody who works full-time, 40 hours or more, they're scored a 1. And then anybody who works less than 40 hours, they are scored a 0.5. So that's the simplified FTE calculation. So for example, if Jenny worked 35 hours in the standard example, she would be a 0.5 FTE. But if I work 60 hours, I'm just a 1. The alternative method is we actually calculate 40 over 40. So Jenny, 35 hours, so 35 over 40, and whatever that percentage is, that's her FTE calculation. So every single person, you get to choose as a business if you're going to do the simplified 0.5 or 1, or if you're going to do the actual ratios for all of your employees. The nice thing about the Summit Bank worksheet that we're going to be posting is you get to choose, do you want the more complex version, meaning the actual ratios for all the employees, or do you want everybody to be a 1 or a 0.5? And then you can run through those scenarios as well. So it's really helpful. It was great that we actually got that piece of information, because
that was a good piece of information from the treasurer and the SBA, and we're excited to roll out our worksheet hopefully tomorrow. Question number 5 that we're getting here at Summit is, what is the FTE reduction safe harbor? Can you explain to us what that is?
So in the SBA form for forgiveness, they talk about how you can actually eliminate the reduction in your forgiveness that comes from your FTE if you bring them back by June 30th. So for example, if I was a widget manufacturer and I've been operating with 10 people, but my payroll forgiveness, my PPP loan was based off of actually having 15 people. So we've had a reduction in our FTE. So right now, my widget company would have an impact to the forgiveness amount. If I brought back those other 5 people though, and it might not have to be the exact same 5. It doesn't have to be Bill, Craig, Scott, Chris, and Kyle. It doesn't have to be the exact same 5. But if I bring back 5 people, then by June 30th, then that whole FTE reduction that would have impacted your forgiveness amount gets washed away. So it's been, that's also been a really helpful piece. If anything, the biggest takeaway from this form that we got on May 15th is we are not trying to play a gotcha game. We're really trying to find ways to make it more flexible and easier for borrowers to find solutions to get the maximum forgiveness.
Okay, that is helpful. This is our 6th question that we're getting often right now, and it is, who determines forgiveness? Who actually determines whether or not my loan is forgiven?
So who ends up determining it is going to be the lender who has your loan. So if you got your loan through Summit Bank, then it would be Summit Bank that determines it. If you went online and got it through a Cabbage or a PayPal, read your loan documents and figure out who your actual lender is, because it's not going to be Cabbage, it's not going to be Lending Tree or PayPal that will determine it. It will be the people that hold the paper, if you will. The other piece of that you need to remember is every single lender is going to have probably a little variation in what their interpretation is of the rule. rules. We're all going to try and be unified and probably try our very best. I shouldn't speak for others, but definitely for Summit, to try and maximize forgiveness for all of our borrowers. But we recognize that there are other advisors that are part of your team, whether it's attorneys or CPAs, and they very well could have very differing views from the lending partner that you've chosen to participate in the PPP loan with. At the end of the day, it's the lender that's going to make the decision. So if there is some conflict or disagreement between the CPA, attorney, other advisors in your team, and the lender, I would discuss those as quickly as possible. That way you know what the lender is anticipating and going to be requiring to maximize your forgiveness. The CPA doesn't make the decision, and neither does the attorney. It's going to be that lending partner.
Excellent answer, and thank you for the clarification. I think a lot of our clients, that's an important piece to know. And then the last question that we're getting here at Summit is, what if I decide not to spend the money and I keep it for future use? What then, Ashley?
Yeah, so this has been an interesting question because when this whole dance started, the PPP dance started, 1% money sounds pretty phenomenal. And then you get no payments for 6 months, and then you got to pay it back in 18 months. So it was pretty appetizing for some individuals to get in line and obtain a PPP loan. And now it's coming out that they never brought back their employees, and their forgiveness, their covered period, right, that 8 weeks, 56 days, they're getting closer and closer to burning through that time. So now what do? I haven't used it. Well, gee, I'll just keep it. I'll keep it, and I'll pay payroll in the future, or I'll improve my building when I open, or I'll buy proper equipment for my staff when I bring them back. All uses that seem to align with the business and wanting it to be open and building back our economy. But the spirit of the CARES Act is, in fact, to bring people back to paychecks on unemployment during that 8-week period. So if you decide that you're going to keep the money for uses beyond your 8-week period, because that was your decision, technically you're in violation of the CARES Act, and the bank will demand the funds back immediately upon the end of your 8-week period. So it doesn't automatically convert to a loan if you decided not to spend it accordingly. The only way it converts to part of a loan is if you had 70% in payroll and you spent 30 in other uses, so that you didn't maximize your forgiveness. So you have a little bit that's left as a loan. It's not meant as, I got a loan for my widget company, I didn't bring everybody back, so I'll just save it for September when I do bring people back, assuming I still have a business, and then I'll just pay it as a loan. That violates the CARES Act, and as a result, in the IFR that was released, I think it was April 14th, one of the very first interim final rules, it calls out on page 17 that the lender will demand the funds immediately back. So just be careful, use it in the spirit of the program, which is to bring your employees back, and then utilize the other 25% for those other uses, rent, utilities, and mortgage interest.
Thank you, Ashley. This was a terrific interview, and for all of our clients, we'll be posting more information as it becomes available on forgiveness. And if any of you have any questions, send us a note, and we'd love to help answer them. So thank you for your time today, Ashley. And again, more information will be posted on sbko.bank as it becomes available. Thank you.
Thank you.